Hello, my lovely people. It's Sunday. As usual, we're back. So thank you all for joining. Hope everybody is doing good. And we've got a big show today, answering all the top questions for the week. Let me know if anything is messed up. And I'll just keep on going so as not to waste your time. So let's jump in. What is going on this week? I think the easy way to think about the story this week is a lot of threes, a lot of pairs, and a lot of questions. And some elephants at the end, which are super cute in in follow up to my altcoin daily session. Anyway, those who would know about that would know. And this is not financial advice. Sorry, it's been a long week as well. And all these questions come from Patreon. Huge thank you to everybody on Patreon for making this possible. You make a huge difference to the channel, so very grateful. Thank you so much. First question is from House Noise. Love that name. Given the economic tensions, how much cash are you currently keeping on hand if the stock market has a big setback? And what do you think? Second question, what do you think about Elon's Twitter post threatening to further develop AI and robotics from Tesla as a company? Great question. And, you know, I got this. Let's start with the second question first. Actually, no, first question first, cash on hand. Just to make sure people know. And I do everything absolutely, fully, openly, and transparently in real time. So these numbers are actual numbers as of today. I keep a lot of margin and cash on hand. So right now I have cash about 13% plus an emergency fund if stuff does go to hell in the handbasket. And my margin is now about 23.3% in my account. And that basically is, imagine you have a whole bunch of, say, Tesla stock and it's not bestowed to anybody. That's what I call my safety mattress. That's why I can do things like sell puts against positions and I can weather any storm. It's by design. And just a reminder as well, I do everything in a Pareto efficient manner. Think 80-20, and that is 80% of my investments are kind of solid, long-term holds, things like Bitcoin, things like Tesla. I know over time they'll go up. And then 20% is for speculation. Okay, that includes things like miners and MicroStrategy and Solana and stuff like that. Just bear that in mind, everybody. But the growth in Solana has blown up my Solana percentage, so now that's a separate story. Anyway, what I did yesterday regarding the second question regarding Elon, literally, I must have had 10,000 questions on this week. So last night I wrote a white paper on exactly this and tied in things like the Tesla bot valuation. This is a free newsletter. Go to substack.investanswers.com, sign up for it. Tons of free stuff every day, a summary of every video, as well as a lot of my thoughts about stuff where I just rant and rave in a white paper. So digging into that question, I just want to set fears, because when you read what's on FinTwit and the newspapers and everything else, people just want any excuse to torch anything. Fear sells, and it's getting very, very extreme right now. The stuff that's going on is borderline criminal. We'll talk about some other criminal stuff today as well. But just to set you all at ease, he currently owns 13.4% of Tesla stock, and he has vested options that would allow him to buy an additional 8.6% at $6.24 per share. These two combined make up approximately 22%. So, to give him comfort, so he can be in a position to make sure he has say in Tesla, is to get to 25%. There's only 3% more, everybody. So don't sweat it, okay? His new comp package will be far in excess of 3% probably, based on history in the past. Now, in the white paper, which, there'll be a link below for this as well, and his 25% control, I actually dedicated like 3 or 4 paragraphs to exactly this, and I talked about the data, the math, and why. He does not want the board to be taken over by some military-industrial complex saying, okay, Tesla, we want you to dedicate all your efforts to developing military robots to kill humans. That is against the ethos of Elon Musk. That's why he wants to have a say in the business. Not full control, by no stretch. At least there'll need to be 2 board members to overpower him on the same page to develop these bot armies or whatever else, or use AI for nefarious purposes. That's the reason. It's nothing to do with greed, okay? But if you read the media, you'll think, oh, he's greedy, he wants more money. He doesn't care about money. GFY, check out that video. He doesn't care about money. Next question. We started with a hot topic. Get a little hot under the collar. Next question is WH Wall. My bag is 100% Sol since last June, but now I notice that one Bitcoin only costs 435 Sol. Since my bag has more than tripled in value as priced in Bitcoin, and the ETF supply crunch is now in play, is it time to swap Sol for some Bitcoin? Great question. And I debate myself this exact thing every single day. I look at all my holdings, I look at all the pairs, I look at all the opportunity, and I go back to my 80-20 safe stuff versus speculation. And again, like you, my allocations are a little bit screwed up. These are my current allocations as well. I won't tell you what's what, but I've got 2 big bags of 2 dedicated pure crypto holdings, and people on Patreon know what they are. And then I'm starting this new thing called SOLAlts as well, because while the market is boring, I want to generate some crypto alpha. Bitcoin and Solana are kind of like literally. I was watching Bitcoin this morning. I think it was at 41,640 was the exact number. I went to make coffee. I came back 41,640. I started working on the deck for hours and hours. Came back 41,640. It was like I was like knocking on my trading view. Is it broken? What's going on? It hasn't moved at all. And that's why we need to generate other alpha. So that's kind of what we're doing. And there'll be another video later today on that as well. For those of you who are interested, it's just kind of, you guys have always wanted me to find things that are, unearthed gems, and we've worked very hard in building that out. So basically the answer to this is never go all in on one asset. Definitely not. So that's the first thing, WHWall. Next, let's look at the chart. This is Solana divided by Bitcoin from the beginning of time. Actually, from April, not the beginning of time, April 2020. And you'll see here, Bitcoin, or Sol over Bitcoin is up 1655, which means Solana has beaten Bitcoin by 1,655%. But you can see it is a very rocky road. And when you're in the blue, the trend is on the side of Sol. So yes, Bitcoin's going to do well, but will Solana do better? Let's try answer that question. As you know, I think it will. I think there's potential for Ethereum to beat Bitcoin, but Ethereum is far riskier. And I think there's potential for Solana to beat Ethereum. But Solana, you could argue, is riskier than Ethereum too. But that's now, all that risk is actually going away because there's stuff happening. But let's talk about Bitcoin for 1 second. Tom Lee says Bitcoin get to $500,000 in the next 5 years. Again, I've urged people in this community since day one, become a whole coiner. Now, if you are, and this guy is good, he is really good. Each whole coin could be worth $500,000. Heaven forbid you got 2 of them, that's $1 million. And that is life changing. Next, speaking of Fundstrat, Tom Lee, this is from Joe McCann on Twitter. He said Fundstrat came out with a price target of 500 to 600 for Sol this year. This year! That's super bullish. Right? We're just shy of $100 now. It's a 5x, 6x from here. In a year, that rhymes. Didn't mean that to rhyme, but that would be impressive. In addition, you got VanEck saying 10,600% Solana rally. Up to 2030, which again is only 6 years away. That's not that far away. And that would be insane. That's the $3,200 target from VanEck and their bull case. And then you have another one, and these two as well. Just shout out to co-founders of Glassnode, Jan Happel and Jan Alleman. These are top-notch analysts. It does not get any better than these two. All right. And they are very bullish in the SOLAlt ETH chart, and they believe Sol will smash ETH this bull run by another 5x from where it is today. Okay, so ETH will easily go to 5K, I believe, which is like a 2x from today. So that means, according to them, that could 10x. I think that's also very bullish, but I'm just sharing what the top analysts actually do say out there as well. And also you got the Solana black hole, which is in full swing. You got Aave, Maker, Render, all pivoting to the Solana blockchain. You got Circle issuing stablecoins on the Solana blockchain. You got Visa doing payments Solana blockchain. And now you got Paxos and PayPal looking hard at it too, and doing the same thing, and it's pretty incredible. So you're seeing a huge deviation from the old world, the OG world as I call it, to the new world. 2020 versus 2024. Very, very different times at very different assets. That's part of the reason why I'm doing this new portfolio experiment as well, which, by the way, has done really well since October. Anyway, let's go to the next question from Krista Berg. It sounds like a singer from the 80s or 90s. Woman in red or something, lady in red. Anyhow, Christaberg, I wonder if that's a play on names. What price should we be prepared to pay per Jupiter token at launch? And should we limit our allocation to 5% of our total portfolio? As you know, I'm very big on what they call dog fooding. So I like to, if I use a product and it blows me away, I buy it. Okay, so me and Tesla, I actually had Tesla before I bought a Tesla, but I drove a Model X in Utah over 5 years ago. Like weeks later, I bought one. And then I had my own Model X, and then 3 days later, I bought a whole bunch of call options. So the rest is history, but that's what I call dog fooding. Now, Jupiter is my favorite platform right now to trade, and I think the launch price could be as high as 60 to 70 cents. These are the current pre-market prices right now, and you can see they range across the board. These are maybe inside token holders who are letting a little bit drip out, maybe just to pay for their living. So I'd say 60 cents to 70 cents. But remember, when Jupiter launches, a lot of people are getting airdropped Jupiter. Okay, I got an airdrop, and it's in the thousands of them. And I didn't even know. I've never done an airdrop. I've never farmed an airdrop. I've got no interest in airdrops until I stumbled across them because I was using Jupiter since October, and all of the transactions brought about an airdrop. So it was all by accident. And there'll be more of them. There'll be 4 more, I think, 3 or 4 more coming over the next few years as well. So don't feel you've missed the airdrop boat. That's what's interesting about this project as well. But what's really interesting is how good it is, and how you can do everything. You can swap very efficiently, very effectively. You can build limit orders on swaps. You can do perpetual leverage trading. You can DCA. It's a one-stop shop. It's pretty impressive. And remember, it will be part of my Solana altcoin portfolio. It already de facto is because of the airdrop. However, how big this 4.7% gets, I think, if you take, say, Bitcoin does a 2-3x from here, Solana could do 5x, these SOLALTs could do a 10x. And that's kind of the ratios, but the risk is also much higher. They can go to zero real fast, so bear that in mind too. My allocation, I don't know. It depends on the price, and the price of Jupiter could tank because people will get their Jupiter and then they'll sell it for a used car or WIF or WIF or whatever they call it. And that's how the market works. So liquidity rolls around. So beware of that too. That means that Jupiter could actually fall to 30 cents, I believe, would be the floor, maybe 45 cents. So beware of that too. But in Patreon, I'll post my alerts whenever I do trade it, depending on what it comes out at. Goodwill Hunting. As the perfect storm brews, thoughts on getting into margin via ETF or 3L tokens, which means 3 times leverage, or other leverage methods. I'm new to the type of investing. Thoughts on timing? What degree should the recession FUD be considered? So brilliant question. I'm going to tackle the last part first. And the way I view recession and risk assets is different to what you'll read in Barron's or Wall Street Journal or Bloomberg or any of these things. But I do it based on what I've seen in my experience over nearly 35 years. So first of all, what happens when there's a recession is central banks cut rates in recessions. Okay, that's interesting. And lower rates make borrowing cheaper. And that encourages spending and investment, which in turn drives up prices of risk assets like stocks and real estate. Okay, it's real simple. And then second, the central banks also, they spike the system. They increase liquidity. They pump money into the economy to get out of the recession. This extra money pushes all prices up, especially risk assets. Then you have inflation expectations go up. The more money there is, the more inflation goes up. In fact, you see that happening now at the Red Sea and maybe the canals in different parts of the world. When shipping costs go up, inflation goes up. And does the Fed control that? No, they don't. And they also don't control the price of gas. But that's a separate issue. But anyway, that inflation expectation will drive up stuff, which also drives up stocks, which is actually a good thing for stocks. And risk appetites also, when interest rates are lower, people look for alpha and they invest in riskier assets to get more alpha. And then currency devaluation is an interesting angle too. Spent a lot of time with currencies in the past. But when rate cuts happen and money printing happens, the currency of the country gets weaker. and that can make its exports more competitive, attracts foreign investment, which drives up the price of risk assets. So they're kind of like the 5 ways in which I frame up recessions. Recessions are not a bad thing if you want to be an investor. They're actually a good thing, which goes against many people's logic. So let's talk about leverage dangers. Leverage is dangerous. They say there's 3 L's that will wreck you. Leverage. I can't remember them now. I forget. But it's a famous expression. Anyway, drop a comment below if my brain's too tired. But here, these are like leverage ETFs. They are ETFs that use financial derivatives, kind of like the way I do, to amplify returns of an underlying asset or index or whatever else. And they have a fee. And also, not only can they amplify your returns or your alpha, but they can also amplify your losses. So remember, it's a double-edged sword. They are expensive. They charge a lot of fees. And so when you are playing with, things like triple leverage stuff, only do it at pico times. For example, if something crashes down, like for example, Meta hitting 90s in late 2022, or Tesla going to 104, 106, they are times that you take this tool because you know you're going to get a V-shaped recovery. Then it's worth the cost, but it's not something you want to hold long term. Like long term for me, for these assets, no more than 12 weeks. And in full disclosure, I'm in a leverage long right now as well on a certain asset, but that's a separate issue. Now, when you talk about tokens, 3L tokens like Solana, Sui, all those different types of things now have these available. I will talk more about them in a minute, but also they also have fees. They are also very risky. They can wreck you. So be very, very careful. If you're new to this field, new to these tools, play with just a tiny little bit of play money. The way I prefer to play it is safely, like buy call options like leaps, long-term, 12 to 18 months plus, on a proxy for Bitcoin, like a miner or a MicroStrategy. And yeah, MicroStrategy is not dead, despite popular belief, what you read out there. So we will tackle more of the 3L tokens in a minute too with a follow-on question, so hold for that. And everything as usual, links together. Next question is from Wolfshin, the baby wolf. I'm considering selling some Bitcoin to buy one of the Bitcoin ETFs with a low fee because I'm fearful of being hacked, losing my seed phrase as I'm moving abroad to an unsecure location. But at 0.2% fees or 20 basis points, it seems like a no-brainer. But many in the community are against it as it goes against the crypto ethos. Screw ethos. Focus on safety, security first. Always, always, always. Can't stress that enough. So little sign here as well. Thank you to the team that puts these beautiful graphics together for us. But absolutely safety first. I love what you're saying. You are aware. Don't listen to anybody. Actually, that's a big lesson for today. Listen to nobody. I was describing to somebody, if I listened to people over the last 35 years, I'd be living on a floor in a cardboard box. Literally. Okay? Blaze your own trail. Make your own decisions. Do your own research. Use data. Do not listen to anybody, okay? So yes, you get a lot more security, a lot more convenience, a lot lower fees. In fact, some are even free right now in these ETFs. And you get risk mitigation too. You could have all your Bitcoin in a seed phrase or on a key and you lose that, boom, you lost your Bitcoin. And believe me, 4 to 5 million Bitcoin already lost. So yeah, the ethos, screw that. Focus on safety first. So you're doing that. But there are cons. There are a little bit of fees. And there are spreads and price tracking errors. But when you're talking about this tiny little fraction of 0.2% or even 0.5% spread on a trade versus losing everything, ETF is the proper option for many, many, many people out there. Okay? We'll talk more about this in a minute too. Next question is, this is from Tankist to 9-1. There was no trend change from blue to orange or buy signal from the ATR model, but the Patreon trade alert was sent ahead of the signal. How can I improve the decision-making process for timely SOL 3L trades, like supplementing ATR with another? So if you look at the ATR here, yes, ATR here does say do not buy. But remember, the ATR was designed for a 12 to 24 hour to 2-day trading time frame. Also, I bought Solana. I can't remember what the price was, $90 bucks, $91 bucks, $88 bucks, $86 bucks. I stack it so I can buy Sol alts. I don't touch my existing bag. I buy net new on Coinbase, move it to Phantom, swap it on Jupiter. That's what I do. Okay. Now, first of all, as I mentioned, the ATR model. I've never used the 45-minute time frame in my life. It's not designed for that. The ATR is designed to be optimized for the 12-hour, 1-day, and 2-day time frames. Now, there are people using it for the 5-minute and 15-minute with great success, but 45-minute is just a weird time. In my whole life, I've never, ever, ever used a 45-minute time frame. I know it's a default in TradingView. Ignore it. Stick with 1 minute, 5 minute, 15-minute, 1 hour, 2 hour, 4 hour, 6, 8, 12, 24 hour. They are the key zones that work really well with charts. Now, regarding if you are leverage pair trading things like here, you mentioned Sol 3L, which is Solana 3L longs, which goes back to the previous question. There are tons of these tools out there, derivatives. This is an example. Just Google Sol 3L, Sol 3S. You'll see all the different ones of where you can get them and what they are. But do notice as well that there are fees involved in these. They're good for short-term trades. They are not something you buy and keep because the fees will eat you alive over the space of a year. Okay, so bear that in mind. It's for short-term opportunities. Now, the tool you want is not ATR. Okay, if you are doing triple long leverage, Solana and triple short, you need PTOS here. If you look at this is the PTOS chart of Solana. It's on the 5-minute, as I mentioned, like the 5-minute, and the win ratio 88.24%. And basically, we'll talk more about this model in a little bit as well because it's related to another question. But that's what you want. And in other fun news too, this is not what this product is designed for. PTOS, pair trading on steroids, is designed for perfectly inversely correlated assets like Tesla, TSLAC. Okay, but there is a community member using it for Solana alts, and he is I can't remember what he did. He tripled his money in 12 hours or something using this, and he's trading WIF, which is dog WIF hat over USEDCAR as a pair, and he's crushing it. And you can see here the win ratio is 97.67%, and yeah, ROI is like 500%. So it's not designed for certain things, but sometimes people are applying the tools to generate revenue, and with the back test as well, you can see if things work or not. So again, not designed for it. Beware. But people are degenning with the tools, which is incredible. Good to see. Next, related from Satoshi Pelosi. Well done. Pelosi's are very good traders. Watched your ATR TA Masterclass video. I want to get my feet wet to grow my retirement bag. At 26 years old, that's amazing. I love when young people are investing and have these tools. It's really impressive. You'll go far, Satoshi. But can we use the ATR to double dip into short positions when a sell signal goes off? E.g., use ATR on Tesla. If a sell signal flags at a top, would exit my long in Tesla as well as enter the TSLAC position. Then hold this position until a buy signal pops and then reverse, rinse, repeat, and grow back. Remember, we build tools for very specific purposes. The ATR was built for things like people that have to do jobs where they can't look at the markets all day, but they can drop in and watch the markets every 6, 8, 12 hours or in the evening or at the weekends. That's why we built this. Okay, so you're using the wrong tool for your goal. Again, you need pair trading on steroids. If you're trading Tesla and TSLAC, here's an example of exactly that. This is just Tesla and TSLAC on the daily. I'm not looking at the 5-minute. I showed you the 5-minute before. This is now the daily. And you can see here, green is buy, red is sell. At the bottom, you've got the inverse asset and the mapping of that inverse asset performance to the performance above. So at the top, you've got Tesla, which is coded with TSLAC, and at the bottom, you've got just TSLAC with the deviations from the mean. And when you see this, you know to buy. So when you go below the 2 standard deviation at the bottom, that's a buy signal. You get it confirmed with the green flag at the top. And then you got your optimized trend telling you to either stay in or stay out of the trade. When you get those 3 things happening at the same time, you buy. And the opposite is when you sell. When you got 2 standard deviations above on TSLAC at the bottom, at the top, you sell. And when the trend turns, you sell. Now what that means is you sell Tesla at the top, And then you buy TSLAQ. So you make money on the way up and money on the way down. And again, PTOS on Tesla, TSLAQ, 100% win ratio on this, which you can modify to any time frame you want, and watch your back test very, very carefully. So that's the tool you want, not ATR, if that's the type of trading you're doing. Next question is from Mrog. Is it possible to get an updated how to retire in Solana theoretical study, or a Bitcoin version or a Tesla version? Yes, I will be doing those, because the last retire on Solana I did, I think it was March 2023. People say it was crazy, but now I was on my own back then, but now I have a lot of analysts backing up some of my theories. Especially you got Fundstrat and VanEck, and you've got the experts from Glassnode, all believing Solana is going to do very well this bull run. So I will do an updated version of these, and I'll do an updated version of the cocktail, because a lot of stuff has actually changed lately, as well as a lot of new price predictions that have come in that are even more bullish than I was. So that will be coming soon. Next is from Snowman. I use SOLFLARE to trade Sol alts. Some NFTs appear. Are they safe? How do I know or handle them? Or if they are airdrops, or is it something else? So first of all, remember, anything that pops into your wallet that you did not buy is a scam. Okay? Remember, the thing about blockchain is everything is public. All the addresses, people have that. And they will look at your address and they'll throw out these NFTs at you, hoping you'll click on them, accept them, and then a piece of virulent code will just drain your wallet. Okay, so first of all, what I do with these things, and they pop in all the time, use a little button at the bottom of Phantom. I forgot to share a screen on it, but it's like choose the visibility of coins, click on that, and I just hide them. You can click on them and burn them, but I don't even want to risk doing that. I'm so afraid of these things. So I just hide them, and I look at what I have, like I have maybe a little bit of USDC, a little bit of Solana, and also only keep a little amount on a hot wallet. Don't have huge bags in a hot wallet, because they say, you might click on one by accident, or maybe a relative will click on one by accident. There goes all your money. Bang. Speaking of that too, by the way, Google ad warning again. Since I started this 3 years ago, these scam ads are there. If you go to Google right now, okay, and you search Bitcoin Live, the top 3 things that will come up are Michael Saylor Bitcoin ads, okay? These are not Michael Saylor. These are from scammers like MicroStrategy, fake MicroStrategy, Summit Cool Doobie, Adele Falala. These are thieves, okay? They will show a video with a QR code on it, and it'll promise you, oh, you send me 1 Bitcoin, I'll send you 2 back. I'm going to rant twice here. If you are stupid enough to think you can send somebody a Bitcoin, they'll give you 2 back, you probably shouldn't be investing. And these are very harsh words, but I've got to say, these people scam people. There's no such thing as a free lunch, all right? Anybody saying they're going to take your money and give you twice back, it's never going to happen. Second of all, I have complained to Google. I've talked to our Google services team, account management team. I have tweeted them. I've gone to them thousands of times. I'm saying, you have to stop this. They never respond. They don't care. So why there isn't a class action suit going after Google for this, I have no idea. I have no idea. So if you have a bunch of lawyers out there and you can rustle up a bunch of people that lost money from these things, you have a case. Google do nothing. Now, there is an angle to that in Google's defense. It's freedom of speech. They didn't allow people to say what they wanted last year or the year before, but now maybe they do. Who knows? So maybe there's a positive there. I don't know. But remember, do not give anybody your money expecting to get more back. It's not going to happen. Ever. 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 Okay? If you don't get that, you shouldn't be investing. Harsh words, but I'm not going to sugarcoat stuff here. Next question. The Yorkshireman and Davey S. Long-term Tesla bull with a nice bag. I have been stacking for several years. Very bullish on Solana, especially over the next 12 months. Me too, by the way. I have accumulated a bag of Sol and plan to layer out as the price of Sol increases. From here, I plan to add my Tesla position. Do you think this is a good idea, as I'm trying to find the balance of selling my Sol bag to increase my Tesla bag before Tesla pops? This is, again, I wake up every day thinking about this exact issue. So one of the things that I do is if you do make, say for example, you make a profit in asset X, I recycle those profits. I leave some of my existing money on the table, take the profit and invest somewhere else. Or I take my existing investment off the table and invest that somewhere else. So you got the right idea here. The problem we have is it's extremely difficult to do for a few reasons, but we have the tools that help, like layer out and stuff. We'll talk more about those when the time comes, when we get closer to tops. Trust me, I will be on top of that. And by the way, I don't like to make the same mistake twice. I missed the top last time, but I was also new. I entered, doing content and stuff halfway through the bull. Now we're way more prepared, and I've spent a lot of time and money building tools to make sure we do not miss the top. And we have methodologies to optimize how much we take out, so we're not caught with our pants down next time. But here, diversification is always good. So yeah, I like the idea of having both. But again, like the very first question, don't have everything in one basket. And both have very strong growth potential. But the timing is difficult. Now, I can tell you, that's why I wrote the paper yesterday and last night on Tesla, on the bot and the AI. They are on the cusp of something very, very big. We don't know what it is. I have a fair idea what it is, but it's going to really revolutionize the world. And as I said before, the world will change 1,600% over the next 2 years. That's just a fact. There's stuff coming that will melt your faces. And they are in the catbird seat for this opportunity. The weakness now is an opportunity. You get to buy Tesla at $212. It's unbelievable. But again, just wait. This is one of those things, like buying Tesla in 2017. You got to wait for 3 years before it pops. That's okay. That's what I do. But I kind of lay my traps because they will be filled. And that's the whole way you need to think about investing too. Same thing with Solana. Who's running into burning buildings at $8? Me, because I knew it was going to pop. I didn't care. Didn't go anywhere for 9 months. I didn't care. Kept on stacking. That's what you do. Same thing with Tesla. Now, Solana is on the cusp of major dominance, as I shared before earlier. They're both going to do well. And I tried to look at multiple pair charts and methodologies. I could not find correlations or patterns between these two because they're not at this stage. But there will come a time when we'll see one of them becoming overheated. One is already totally oversold. One is kind of stabilizing right now. But I will be on top of that, and you'll see what I do in real time too. So you have the right idea. I don't have the timing for you just yet. But yeah, you're on the right path. But Tesla could blow up if something revolutionary does happen. It could be an FSD V12 breakthrough, rollout, adoption, robotaxi, Optimus bot going into full scale production and launch in 2016 or 2026, 2027. Again, 1 or 2 years from now, it'll be a very different animal. And that I'm pretty sure of. Next is from Aussie Crypto Surfer. I saw you earlier actually in Discourse. Now, I've been looking into options recently up to my holdings of MicroStrategy to 100 shares for when I am ready. With the price tanked would now be the correct time to sell puts and then use profit to buy calls or just more shares if I am bullish on MicroStrategy price. With the price down 21%, this seems like a big opportunity. Very good point. And just a reminder again, proxies got smashed. I expect them to get hit, but not quite this bad with the ETF, but they really got oversold. Let's look at the chart here of MicroStrategy, of where it's flashing a buy signal. This is the confluence model, and you can see here, every time it flashes the green flag, sell a put, green flag, sell a put, green flag, sell a put, green flag, sell a put. It's a very effective strategy. So yes, that works. But there's another thing too. This is the ARB Cloud. Again, another tool. It's where you can pair trade MicroStrategy and Bitcoin. If you can do that in your Fidelity account or something else, very lucrative time. When it's above the cloud, you sell MicroStrategy for Bitcoin. When it's below the cloud, you sell Bitcoin for MicroStrategy. You do this all day long. This has been extremely lucrative over the last 3 years. But here we are again. We are under the cloud. That means technically MicroStrategy is oversold. It will recover. And but we have another headwind as well of MicroStrategy, and that is sailors selling some stock to buy some Bitcoin. He has a plan until April. I'm not sure exactly. I need to calculate how much that sell pressure is. Try calculate it, but beware of that too. But again, after April, you know what happens after April? Halving. And this is a leverage trade on a leverage trade of what is Bitcoin, which will be exciting. So either way, I prefer trading MicroStrategy for this exact reason. The options are very well priced. I know when to sell calls against my position. I know when to sell puts. I know when to buy calls. And I got this close to buying some on Friday. Anyway, next question from Austin N. rejuve.ai. Thoughts on it? Let's talk about it real quick. It is one of these things, kind of like they will rejuvenate you and make you live forever. Just buy the token. The value proposition, I had a quick look at it. I wouldn't say it was a big deep dive, but tokenomics suck. The value proposition isn't entirely clear. There's lots of other projects in the space like this. The data collection methods could do with more transparency. And it could just be another thing like the World Spy Coin, or what they call World Coin, an attempt to get biological data for free and make money off that data and sell it to big pharma. And again, I'm not sure of their ethical data practices and user privacy. I would not touch. So, easy one. Next one, valuable. What's your perspective on ETH ETF hype that is building now that the Bitcoin ETF hype is behind us in terms of upside? Do you see Sol as a better place to be than ETH itself as ETH begins to pump in anticipation of the ETF? And thinking of swapping some Sol for ETH, at least short term, while it's cooling off. So there was a blip in time, and that was the week before last, where ETH did outperform Bitcoin and Sol. But remember, ETH is extremely far behind. It has done really badly over the last 14 months compared to other assets. It's completely underperformed Bitcoin and completely underperformed Sol. So I think the ETF for ETH hype has fizzled out. It won't be here for another 3 to 6 months. And yeah, when it does come, it'll happen. But look what just happened with the Bitcoin ETF. And remember, Grayscale also has an Ethereum ETF, Ethereum Trust product. So it could go through the exact same thing. So don't get too excited. And as we said before, per the top analysts, not me, they believe Sol will outperform ETH by 500%. They said in the next bull, but we're already deep into the bull run as well. When I see stuff like, oh, we're coming out of the bear market. There was an article I read this morning that just said that. It was kind of funny. We are 13 or 14 months into the early bull. A full bull happened about, I think, January 7th or something. So bear that in mind, everybody. We're in the bull run. So we'll see what happens here. And favorite part of the show, thank you all for being here too. Shout out to Patreon member JV Fender, whose friend Danielle works at the coal to conserve. She uses funds to help build electrical fences for elephants so they can roam, but don't have to be chained up all day, along with many other things like building walls, etc. Thank you as well, Danielle, for helping these beautiful creatures. And we also adopted Loldoiga, affected by the drought north of Mount Kenya, and she was abandoned, but now she's well taken care of and happily sandwiched between other elephant orphans. So they're all having a good time. So beautiful people in the world. And tomorrow, by the way, DCA Live is on Ivan's channel. Usual time, usual place, 7:30 a.m. Pacific, 4:30 Central European time. And don't forget to subscribe if you want to get smarter. So now, time for some live questions from the beautiful audience. Thank you as well all for coming. And thank you to the mods in the chat for being here too. I got to drink some tea before I try. I'm looking at Bitcoin price, 41.7. It's gone up $60 today. Today is all. So let's do some questions. And thank you all. From Shakir Hussein, funnels.com. Never heard of it. What is your top 5 SOLALTs? Well, I've done 2 already. They were Lifinity and it was another DEX. I can't remember. I was so tired. Let me pull it up because I literally my brain is part of Shadow. Shadow, I think, was the other one. There are 2. Hopefully, I have the energy to do another video today. But the way I choose them is based on the chart. If something is running, and they're all running today for some reason. and yesterday. I've got to find something cheap. I don't chase. I replace. So it'll be a fun. I don't know what they are till I research. I have the models that tell me what they could be, but it depends on the price. Every asset has its price. So hope that helps. JKS. Would you consider sharing with us either here or on Patreon a pie chart showing your percentage allocation to real estate, equities, and crypto? I'd like to see if I'm on the right path. I normally like to have a third, but real estate's really difficult to appraise, especially with certain markets post certain events. And with mortgage rates being so high, it's very difficult to determine the price of real estate. You know, a place could be worth $1 million, it could be worth $2.5 million. You don't know. And that's the issue right now. But again, it's a rule of thumb. So everything will fluctuate. As I mentioned before, as rates fall, real estate will go up. As a recession happens, money printing will happen. Real estate will go up. So you can't, you don't determine your real estate on the fly. Your real estate decisions are 5 to 10 year decisions, whereas your stock and crypto decisions are 6 to 12 month decisions. So it's just a guideline, but don't overthink it at all. But right now, I am, very not far from the third. But to appraise that and give you a real time pie chart, I can't. I can do that for crypto and stocks and options and all that, but not for real estate. It's impossible. Shakir again, please cover Pith and Asana, and you know I will. Doc Intern, could there be an under the table deal between GBTC and BlackRock? Why would GBTC set fee at 1.5%? And that is suicide, unless the plan all along was to allow massive flow of Bitcoin at low prices to BlackRock. So yeah, I've think about this a lot now for the last 10 days or so. If you take the GBTC fund of Bitcoin, about 10 to 20% is held by retirement accounts. And many of them got in early and Bitcoin price has gone up. Okay, so the problem they have is if you're not in a retirement account, say you have Fidelity and you own GBTC, you can flick it over to IBIT if you want. But the problem is not everybody has those retirement accounts, only 10 to 20%. Now we've seen approximately over a quarter of that drain already. So those that were going to take action did. There's more that potentially could. I think the sell pressure out of GBTC from these retirement accounts will stop in 2 to 4, maybe 6 weeks, or at least slow down dramatically. And the reason why they don't want to sell to get out of the 1.5% fee is because they have a huge tax burden. If they sell it now, they may have to pay a ton in capital gains, and that's not worth it. You can, the capital gains far offsets the 1.5% fee for a decade plus. And that is the gambit I think Grayscale are playing. They want to milk it because they know 80% will stay. Only 10 or 20% is in retirement accounts, which means they've got the flexibility to move. So that's going to dry up. And so far as well, the ETF, the amount of money flowing into these things, it's madness. I read somewhere as well. I think there's 900,000 Bitcoin, 900,000 so far in all the global ETFs and ETPs today, which is large. That's nearly 1 million Bitcoin. Remember, that's 1/14 of the total supply that'll ever exist because 5 million are lost. And people continue to lose their Bitcoin every day. They continue to lose their keys, seed phrases, become, incapacitated somehow. And that's sad, but that's the risk. That's why that question earlier from our member regarding I'm going to a faraway land that is maybe not the most secure. Should I just buy the ETF? The answer is hell yeah, absolutely. Very clever. Do it. So yeah, that's the issue with Doc Intern. Kiwi Robin, Panama Canal restrictions, eyes on commodities. What's the playbook? I actually made a post on that earlier today. It was referring to a McKinsey article that's out there. The Panama Canal is suffering from what's it called? Loss of water, not dehydration, but the opposite of flood. Oh my god, I'm so tired. Anyway, that's making it very shallow, so they have to redredge it again. They will be able to redredge it, but there will be delays. There will be inflation, just like the Red Sea issue that's going on right now. And if you are a Chinese or Russian ship, you're just fine. You can just sail on through. But if you're not, you're in trouble. And that's going to drive a ton of inflation. It's already interrupting things like Tesla and other car makers as well, as the ships take 10 days longer to get to where they need to be. So the playbook for this, expect... it's hard to say on commodities. So I don't really play commodities. I think it'd be more of an inflation play, bond market play. If you could buy call options on the inflation of products coming from Asia going up, the answer is yes. That would work, but I don't know yet. I need to think more about that one. It's a tricky one, and I'll make a post for you in the community too. And thank you as well for your super sticker. Andy, Jeff Hammer, Bottle Red, Doc Intern, Nick M, Signal 103, Chief 360, Long-Term Holder, and Kiwi Robin. Thank you all, everybody, for being here. That was quick, and I hopefully can make it back for a quick one later on that SOLAlt stuff as well. So I'll see you all tomorrow, and thank you as well to the mods in the chat for being here. And Piper, Daryl Anderson, and Crypto Ninja. Nearly forgot. Thank you all. See you all tomorrow as well on DCA, and later this afternoon as well. Bye-bye.